In today's video, we are going to talk about the Toronto home vacancy tax. We're going to talk about what it is, and then we're going to discuss if it's actually going to have a positive impact when it comes to the Toronto real estate market. Okay, so vacant homes have been a topic of discussion for years now. The city of Toronto has been contemplating whether or not to penalize homeowners for leaving their homes unoccupied. Well, the verdict is in, and they finally made that decision. Toronto is cracking down on homeowners and nailing them with the vacancy tax. This new tax is targeting properties in the city of Toronto that are left unoccupied for long periods of time. And the reason is that they believe by putting this pressure on such properties, it will motivate the homeowners to put their home on the market for rent, therefore increasing the supply of housing in the city. Now, the question is, will it work? We'll discuss that question later in this video. February 2nd, 2023 is a very important date because that's the day all Toronto property owners will have to submit a declaration of their property's 2022 occupancy status. If not, a fine of $250 will be issued. The portal is now open. So if you are a Toronto resident and you're watching this video, it's mandatory that you go and fill out this declaration at your earliest convenience. Stop what you're doing and go fill that form. Now keep in mind, this is only for residents in the city of Toronto. So if you're in any other region other than Toronto, you don't have to worry about this tax right now. My prediction is if they actually see an improvement and they get more tax dollars, I believe they're probably going to issue it to all the surrounding cities. So don't laugh at those Toronto residents just yet, because karma might hit you in the butt. So again, go fill out that declaration at your earliest convenience. A link is in the description part of this video so that you guys can go there and do that right now. So an annual tax will be levied on vacant Toronto properties payable to the city beginning in 2023. Now, in order to be considered a vacant home, the property has to be unoccupied for a total of 6 months or more during the previous calendar year or otherwise deemed vacant under the bylaw. Again, the main purpose of this tax is to discourage owners to leave their homes vacant and to hopefully increase the housing supply for rent or for sale. If a homeowner decides to keep the home vacant, then the tax revenue collected will be put towards affordable housing initiatives in the future. So how does it all work? Well, it's very simple. All residential homeowners will be required to declare the status of their property every single year, even if they are currently living there. Declarations must be made by the homeowner or someone acting on behalf of the homeowner, such as a lawyer or a trustee. Based on the declaration, the city will determine whether the VH tax applies or vacant home tax applies. Principal residences are allowed to leave the home vacant for a total of 6 months throughout the tax year, and they do not have to be taxed. So now we're going to discuss the vacant home tax calculation. The vacant home tax calculation is calculated best when you smash that like button and subscribe to my channel so that you can receive more beautiful videos like this. Yeah. But with all jokes aside, the tax will be calculated by taking 1% of your home's current value assessment, or CVA, which is a fancy way of saying the value of your home in the eyes of the city. So, for example, if your CVA is $1.5 million, then the tax payable will be $15,000 for that year. The tax will be based on your occupancy status for the previous year. So if your home was, say, vacant in 2022 for 6 months or longer, you'll have to pay that tax the following year. For example, in this year, 2023. Property may be left vacant and exempt from the new tax only if they meet one of the following criteria. First one is death of a registered owner. The property was vacant due to the owner, let's say, passing away. Supporting documentation will have to be provided, and ideally it's going to be something like a death certificate. The next one is repairs or renovations. So the vacant property is, let's say, undergoing renos, and these three conditions have been met. So let's say number one, the renos prohibits the property from being occupied and used during the renos. Number two, let's say permits have been issued for the renovations. And number three, the city's chief building official is of the opinion that the repairs or renovations are being actively carried out without unnecessary delay. The supporting documentation required for this exemption is going to be a detailed explanation of the type of renovations that's being done and why it actually prevents people from living in the unit, as well as copies of any permits relating to the renovations, or basically anything that proves that you're actually doing that renovation. The next exemption is the principal resident is in care. So the owner or owners are in the hospital, let's say they're in a long-term or supportive care facility for up to 6 months during that tax year. They can actually use this exemption for up to 2 consecutive taxation years. Supportive documentation that will be required will be a signed letter from the healthcare facility on their company letterhead. The next exemption is a transfer of legal ownership. So let's say you purchased your property in the previous year and the sale involved a complete transfer of ownership to you. During that process, the home, let's say, was vacant for 6 months, and let's say the previous homeowners moved into their new home, and then you purchased your home 90 days after but didn't end up moving in for a month or two. This will qualify under that exemption. However, this exemption only applies to a change of ownership to an unrelated individual or corporation, and if you don't qualify, if you do not do a name change, add, or subtract existing owners from the title, then you won't qualify for this. And the supporting documentation that will be required will be proof of ownership transfer, such as transfer of deed. The next exemption is occupancy for full-time employment. When the vacant property is required for occupancy for employment purposes for a total of at least 6 months in the taxation year by an owner who has a principal residence outside of the Greater Toronto area. The supporting documentation that will be required will be the proof of residency outside the Greater Toronto area and a signed letter from, let's say, the employer on a company letterhead or an employment contract. The next exemption is a court order. When you have an enforceable court order that prohibits the occupancy of the vacant property for at least 6 months during the taxation year, supporting documentation that's required will be a copy of the court order itself. Another thing you have to take into consideration is that if you are buying or selling a property that has been vacant within the City of Toronto, buyers and sellers have to make sure that the appropriate arrangements have been made to ensure that the proper declaration has been filed. This is important because the vacant home tax will form a lien on the property, and any unpaid taxes will become the purchaser's responsibility. Another thing to note is that if you are closing on a property between January 1st to February 3rd, the seller must complete the declaration prior to the closing because only the seller will know the occupancy status of that previous year. A copy of the completed and filed status declaration has to be provided to the buyer, preferably before closing, and in addition, sellers have to provide a statutory declaration at closing confirming that the filed property status declaration is true and accurate. However, if a closing occurs between February 3rd to December 31st, then the purchaser must submit a declaration form in the following year. The purchaser will qualify for the transfer of legal ownership exemption, so just take note of that. For more information on audits, notice of complaints, appeals, late payments, declarations, and fines, I'll put a link in the description of this video for you. Now, the million-dollar question is, will this tax be effective? Will it work? Will it bring more inventory of homes in the rental and resale market? And will the taxes collected help create more affordable homes in the future? Roughly 7 to 9% of homes are vacant in the Greater Toronto area. That's a lot of vacant homes. I do believe this initiative will positively impact the markets, perhaps in the beginning, but as time goes on, the markets always adjust. I also believe more homes will become available on the market right away, but it will cool off as the market adjusts to the new tax. I also personally don't mind the tax because in a market like Toronto where there is so much demand for real estate, finding a way to increase supply will help the long-term stability of their real estate market. Although interest rates are high right now and buyers are on the fence, we still have about 2 to 3 months of inventory of homes available on the market in Toronto, meaning if no homes came on the market today and the only supply left was what was currently there, it would take about 2 to 3 months to sell that existing inventory. The demand in the city of Toronto is still high. It's not gone. Rather, people are scared. They're uncertain. And in times like this, people tend to like to wait things out, see how they go, especially when making big purchases such as real estate. Now the question is, will other Canadian cities adopt this new tax? I guess only time will tell. That concludes this video, guys. Thank you guys for watching. Don't forget to smash the like button and subscribe to my channel. I'll see you guys in the next video.